All right, we are live. Okay, ladies and gentlemen, yesterday on Monday's live stream, I said to prepare for a choppy week in the market, and that is exactly what we're getting. Welcome back, investors, to Ticker Time News. I am Adam, and I am super thankful for you here with me today. Now, the stock market had plenty of reasons to decline today, and that's exactly what it did at the open. Now, after that, however, it was mostly in an upward recovery march for the major indices and many stocks within them, which ended the day close to their highs for the session. In front of you is the SPX. That's the ticker symbol. This is what I use to follow the S&P 500. You can do this at home by going to the description of this video, clicking on the link for TradingView. Sign up for a free account. It doesn't cost a penny, and you can follow along at home with all of the charts that we do. All right, I'm going to hop into the 5-minute chart on the S&P 500 so you can see what I'm talking about. Look at this. For the past 3 sessions, that's what you see right here, and it's nothing but up and down and up and down. Very choppy. Let's zoom in on today, which was, by the way, the complete opposite from yesterday. From yesterday, we get this nice V shape, a nice fall yesterday, and then we get the nice extension today. So let's zoom in on today. Earlier this morning, we had this gap down right here, a gap down pre-market before the market opened. And it kind of happened the first 10 minutes of the market. We dropped. Why did we drop? Because retailer Target, ticker symbol TGT, and railroad operator Union Pacific, ticker symbol UNP, they played a big part in driving the negative start to the market. They both issued profit margin warnings. Now, we expect this. We talk about it frequently, but margins are going to be squeezed and contracted at companies as the economy gets worse. Now, if you're of the mindset, you've got your own investment thesis, and it says that the economy is strong and will remain strong, okay, that's fine. At least you have your theory and you've done your due diligence. On the flip side, my investment thesis for the market says the market was strong at the beginning of the year, especially the consumer. Jobs were actually good too, a good, healthy job market. Right now, though, consumers are being weakened. They have to jump into their savings account just to meet up with inflation. And that savings account, for some, have already dwindled away. And now they're diving into credit cards to pay for the necessities: food, water, fuel, clothing, shelter, right? And that, my friends, leads to a weakened consumer. Their savings are wiped out. They're going into debt. That's the end of this year. In my investment thesis, that's where we're headed. And the economy follows the consumer. If the consumer does not have money to spend, companies will not make a profit. If consumers don't have money to spend on discretionary items, then profit margins get squeezed, and then maybe the company ends up, well, we didn't turn a profit this quarter. Now, I know that's highly unlikely for most of the companies in the stock market, but it is a possibility for several, because margins will get squeezed. Profit will shrink at these companies because consumers aren't spending the money because they don't have the money to spend and begin with, because they're paying it all in these record high gas prices. So it's just a big snowball right now. It's been kicked down the mountain and it's rolling, and it's growing and growing and growing as we speak. So that's what these companies were talking about, with profit margin being a concern. And that's why they issued this statement. And that's what sent the market gapping down and selling off at the beginning of the morning. The market didn't know where to go. Target was blaming the clear excess inventory that they have. You know, they ordered inventory, it got backlogged, finally made it to the store, But now that inflation is high and now that consumers are being weakened, they don't have the money to buy these things. And then Union Pacific, who is a rail operator, they're shifting freight all across the country. They are blaming cost inflation for their squeezing of the margin, right? We can say it in an odd way like that, and it still works. Now, their news came on top of some other surprise decisions by the Reserve Bank of Australia. And is this setting the stage for our Fed here in the US? It could, but the Reserve Bank of Australia, they raised its key lending rate by 50 basis points. When everyone was expecting a 25 basis point rate hike, they got a 50 basis point rate hike. They're up to 0.85% right now. Now, on top of all of this, a report out of Germany showing weaker than expected factory orders for April, and news coverage highlighting national average gasoline prices hitting a record high, $4.92 a gallon. Consumers can't keep up with all of this inflation from everywhere. And my apologies. If your thesis doesn't see the consumer weakening right now, do a little more digging. You'll see it. As a matter of fact, you don't even have to you don't have to do digging. No due diligence. You don't have to. All you need to do, go to a gas station, fill up your vehicle with gasoline. Go to a store and shop groceries. Go anywhere else you need to go. Look at your bills that are coming in for your water, for your electricity, for your propane or natural gas. Look at them. Look at the prices and think about, well, what were these a year ago, 2 years ago? What were they in 2019 before the pandemic? And then compare to what they are right now. That's all the research you need to do to understand the consumers being weakened. So soon after the opening bell today, the Dow Jones was down 0.8%. The NASDAQ, it was down 1.4%. And the S&P 500 was down a cool percent. And just as quickly as that, they started to rebound as the CBOE Volatility Index, which is the VIX, rolled over. And investors stepped in to buy on this initial weakness in the morning. Notably, the CBOE Volatility Index hit 26.24 shortly before 10 a.m. Eastern. Look right here on the chart. I'm going to circle the wick or the candle here for 10 a.m. Eastern, right here. Right there. It trended lower, the VIX did. It trended lower for the rest of the day from this point right here all the way through the rise to the end of the day right here. And I shouldn't have this being red because it's accelerating, it's expanding, going up today. All the way up to this point. And the VIX ended at 23.98 as the stock market's closing bell rang. Now, the drop-off in the so-called fear gauge coincided with a pickup in stocks today, which were also helped by the following few items. Now, I want you to listen to these items carefully. I'm going to clean up the chart here a little bit. There we go. All right, and I'm going to go back to the daily view here. I'm going to take volume away so we can see the candles a little more better. And you can see this consolidation pattern, right? We had expansion going from this third low, super low of the year on May the 20th. We had expansion all the way up to May the 27th. And then we have contraction happening right now. where the bottoms right now seem to be somewhere around 4,070, 4070 on the S&P 500. We'll look at the SPY and the QQQ and the NASDAQ in just a moment. Oh, before we go any deeper, there is something that I want to share with you. I did it yesterday. I'll do it again today. Webull is giving you 6 free stocks for their 4th birthday celebration. Now, these 6 stocks are valued at up to $12,600. All you have to do is open an account and deposit any amount. This is one of the best ROI or return on your investments that you could possibly get. So open an account, deposit any amount, and get your 6 free stocks. Just click the second link in the video description. This video description, click the second link, and you're off to a great start on your investor journey. All right, let's get back to this. Now, the swing, let's see here. There we are. Now, the swing in stocks going to the upside was also helped by the following factors. Number one, the S&P 500 held above the May 27th low. So if we look again, the May 27th, that's this where the contraction started, okay? That's when the rally ended and we started contraction. Now the low for that day, let's get a clearer view here. The low for that day was 40.77. We're at 41.60. That's where we closed today. The high for May the 27th was 41.58. We're 2 points above that right now. What do you think could happen tomorrow? Looking at this contraction pattern right here for the S&P 500. Let's look at this green candle in the middle of this contraction pattern. The high was 41.77. 41.77. So we're about 17 points away from that. Do you think it could be that tomorrow, and I'm going to go back to the 5-minute chart for the S&P 500, do you think that tomorrow we could be in a situation where we gap up just like this, but then we sell off for the rest of the day? Could that be tomorrow's pattern already setting up? There's a good chance that that is the case. Let's go back to the daily view. Now, that would just, again, no guarantee that that will happen, but that would just keep right in line with this little pattern that we're having, where we get this nice rally, a good day, and then it's met with slow sell-offs. We bounce back up, slow sell-offs. We bounce back up. It's a possible pattern. It could be broken tomorrow, and we get a green day. It is possible, but whatever the case, it's going to be choppy, right? It's not going to move in major ways. I don't think, not yet. I don't think this is going to break out anytime soon. Possibly Friday, but not yet. Not yet. Now, the S&P 500, this is still number one I'm still talking about. The S&P 500 holding above its May 27 low, which was the end of the rally and the start of the contraction. That's number one. Number two, a lack of follow-through selling pressure in Target. Remember Target, TGT is the ticker symbol for Target. Let me go look here. I'm going to pull up the 5-minute chart for Target. Target was down 2.3% today. All right, let's get Target up here for us. Now, end of the day, Target was down again, 2.3%. And if we follow over to this morning, you can see right here. Let me make sure I got this right. Okay. So Target ends yesterday up here, right? That's where it's at. And then we get the bad news. Target falls all the way down here. Okay. But that selling pressure that we saw because of the bad news, because Target is expecting their margins to be squeezed, that didn't last at all. There was no follow through on that, and the stock literally bounced right back up. From this bottom, it bounces right back up immediately by 10:45 Eastern time. So an hour and 15 minutes is all it took for Target to bounce back up. Still down from yesterday, but not down that far. It was down nearly 10% in pre-market trading. And then you've got Union Pacific, right? UNP is the ticker symbol. Same exact pattern. You would think I'm looking at Target again, right? We have, again, it closed yesterday up here. We get an immediate sell-off down here. And then we get an immediate bounce back. Let me make sure I got my drawing tool here. We get this immediate bounce back, and by 10:45 Eastern time, 1 hour and 15 minutes, identical to Target, and we have a rebound. Now, the nice thing for Union Pacific is it actually ended the day in positive territory, up 1.5%. Target can't say that. They were down over 2%. Selling pressure, no follow through. No follow through whatsoever. So, and again, this drop right here early in the morning for Union Pacific, it was 4%. So they clawed back 4%, and they were up a 1.5%. So that entire rebound from the early drop of 4% in the morning to the close was a 5.5% rebound. That's just wacky, if you ask me. That just doesn't make much sense at all. That's still number two. Number three, the 10-year yield slipped back below 3%. 10-year yield, US 10Y, to look at the 10-year yield. Now, it had dropped 7 basis points. I'm going to go back to the daily view here. There we go. So as you can see, the 10-year had been on a roll. It bounced off of its 50-day moving average down here, right here below its resistance on May the 26th, May 27th. And remember, May 27th is when the S&P 500, it stopped its rally and it started to contract, okay? The 10-year breaks resistance, and it was on a very fast run here, up to 3%. But 3% is a resistance level for the 10-year. It takes some mighty pressure to push it above 3%. But once it does, then it's got room to run. So it slipped 7% today to finish the day down 2.97%. And it's nearly there right now, unchanged. That was the third thing today. Now, the fourth thing today was the broad-based buying interest that benefited all sectors. Today's best performing sector was the energy sector, up 3.1%. All right, let's clean up the chart here right quick and then open up sectors. All right. Pull this down, and there we go. Energy, I believe, is the bottom. Yes, it is. Energy, best performing sector, up 3.1%. And look at energy right now. We talked about this the last time we looked at energy. It is right up against resistance right now. Now, remember at the end of yesterday's live stream, we talked about risk reward. Well, right now, I'm going to put this box right here. Okay. I'll leave it like that. Hold on. I'll leave it like that. All right. Super small, right? Make sure the color is green. Now, I'm going to add a second box. Okay. That is the same, except I'm going to make this one red. Okay. This right here is your risk reward in the energy sector right now. So the energy sector hitting resistance, if it follows this pattern that it's been on now, going back to October of 21, then our reward for energy is getting kind of tight, because energy has two things. It's really got three things. It can either consolidate and move sideways, it can break through this, or it can start falling to the bottom of this trading channel that it's in. Now, energy is hot right now, mainly fueled by oil, because that $120 a barrel, yeah, that's hot. So our risk reward for energy right now, it looks small, but since energy has just been on fire all year, it's really hard to bet against. And this week, actually, 50% of our top 10 momentum stocks this week, I sent out the list yesterday to our investors, were energy stocks. And they were all up between 1.2% and 4.6% today alone. And just a quick note, if you would like this valuable content to help you along your investor journey, then come join us. Click the first link in the description. We'd love to see you there. Okay, enough of that. Now, the energy sector is up 65% year to date. For that, oil has been a big mover. So WTI crude, and you can type in WTI crude oil, you can type in US oil, and that'll get you there to the chart, and you can see oil's run. And I told you yesterday, I left a circle there, that oil is in this bubble right here. It's extended above its resistance line. It is over that right now, and it's basically consolidating, contracting. But oil today gained 1.2% to $119 a barrel. It sits there right now. It is down about 37 cents a barrel in the after hours. So it's barely moved. Now, one of the big movers today was ExxonMobil. Ticker symbol is XOM. Now, ExxonMobil, look at that big candle for today. They were up 4.58%. Now, let me take that back. Why was ExxonMobil up so big today? It had a little to do with oil, sure, yes. But oil, remember when we looked at the chart, even though it was up a bit, it's still moving sideways in its bubble. Exxon was upgraded today by Evercore ISI, and they upgraded them to outperform from inline, which is basically neutral. And not to get into off topic, But on our top 10 momentum stocks list for this week, ExxonMobil was number one. And it was number one for a reason. It is the top momentum mover in this market. And there have been many times where I have thought, you know what? Exxon is done. It has reached its limits. It can't go any further. And you can see a couple of lines that I have on here, mainly this red line right up here at about $83, $82, if you want to give it a range. I thought, no way, that's where it's going to stop. And it did. It first came right there and stopped for ExxonMobil, right here. Boom. But then this whole area right here, this was like the choppiness that we see in the market right now, where it just up and down, above the resistance, below it, above it, below it, until it finally broke out and went soaring higher. So I don't count Exxon out, at least not yet. Okay, moving on. Let's see. Adam, do you consider streaming on Twitch too? You would get so much. I have not thought about streaming on Twitch. I'll have to look into that. I haven't even thought about doing Twitch. I know it kind of has a reputation for being a gaming streaming service, but it's definitely opened up and does more than. I will look into that. Absolutely. Twitch. As a matter of fact, I'm going to write that down. See if I can find some time this evening to look into that. All right. I'll look into Twitch and see what it's like to get set up over there and live stream. Have to see if the equipment that I use too can stream to Twitch. All right, wonderful idea. Thank you. I greatly appreciate that. As a matter of fact, I'll throw it up here for just a moment, so other viewers know what we were just talking about there about Twitch. So I'll look into live streaming on Twitch and see what I can do about it. Okay, now for the most of the day here, the energy sector was the only sector to gain at least 1%. But late buying interest helped out a lot of sectors. Industrials was a big one. They were up 1.4%. Now, I'm still getting familiar with my list here. There's industrials. Industrials being up 1.4%. Big gainer today. And you can see this V shape that industrials were in. Down and then boom, they've been running hot. Now, if we're looking at support resistance here for industrials are coming up to a spot of resistance right here. It'll be about 825, 826. That area could act as resistance. It was very choppy in that area earlier in May. It acted as support back in the beginning of March. It did slip through it the middle of February. So we'll watch that line coming up. Healthcare. Healthcare is usually a staple defensive sector. Utilities. Where's healthcare? Real estate, healthcare. Healthcare. There's healthcare. All right. Healthcare was up. What would it finish? 1.3%. Nice strong day for healthcare. And again, this is a defensive sector, right? When people want to protect their gains, protect their money, they will go into healthcare. They will also go into industrials. And we can see a clear bottom here of support for healthcare. As a matter of fact, I'm going to put a line right here. because really we've got a zone for healthcare at that bottom. So it's rising. If we're looking for a peak, we're probably a little ways away from that right now. I don't think we're going to get to it because we're just bouncing around right now. But it's also kind of a zone area. That's kind of its zone there. Of course, it does break out a couple of times. But it's really been treating its 50-day moving average as resistance unless it gets some real momentum to get through it. And then we've got information technology, which I believe is this one right here. They finished the day up 1.2%. And again, it's moving sideways like the rest of the market. And you can kind of see it here. Information technology, it's got its 50-day moving average right here. It's got its 21-day moving average right here. And it's like being cupped in between those two, acting as support and resistance, even though there's a little bit of gap above and below, consolidating. We're in a contraction period. In the market, we contract and expand, just like the beating of your heart. Sometimes there's rhythm to it. Most of the time there's not, okay? So let's not get all wishy-washy about beating hearts in the stock market. that could go terribly wrong. All right, so yes, contraction, expansion. Since we're contracting right now, and you can see it in the indices, we are contracting. Expansion is the next move. But where are we going to expand to? That's the big question. And again, it's a bearish bias until it's confirmed to be a bullish bias, okay? Because the long-term trend is down still. All right, moving along. The only sector that did not finish higher was the consumer discretionary sector. Now, does that surprise you? With Target saying compression, margins are going to be compressed due to discretionary spending, I think that is a big red flag for retail stocks. As the consumer continues to get weak, and this is the consumer discretionary right here, we are contracting, waiting for some sort of expansion, and I would be willing to say that this expansion that we're seeing right here, I'm not sure how long it's going to last, but it's going to lead, I believe, to further downside. Further downside. So let me get this chart back up again. Okay. Now, for consumer discretionary, these are the stocks that have retail, or this is the this sector, excuse me, that has retail in it. You can see we've got a lower low, lower low, lower low. We also have lower high, and you can see it with the trend line there, a lower high and a lower high. This is a bearish signal, okay? The only positive thing that I saw today in consumer discretionary, and I have to go in a little bit tighter and mess this chart up here. Look at volume. Volume had been trending down until yesterday. Yesterday and today, volume actually ticked a little bit higher. That's interesting to me. That means distribution, okay? There are sellers in the market trying to get out after we had this little rally, and there are people stepping in to buy from those sellers at these levels because maybe their investment thesis believes that this is a short term and we're near a bottom. It's interesting. It's just some food for thought here. Again, there are too many bearish signals standing out as red flags right now, but this is one thing that could be seen as potentially bullish. So just keep that in the back of your mind. But again, not every theory is perfect and crafted just right. Sometimes we miss little things, but that is one detail that I wanted to point out to make sure you are all aware of that. Okay, moving on. The consumer discretionary sector, it lost today 0.4%. But even its loss felt like a gain, given Target's warning and considering the sector was down as much as 2.7% at its worst level of the morning. Now, moving off of the sectors, an advanced decline line that looked questionable at various points during the days left no question by the end of the day that a bullish bias prevailed today, and only looking at today and not the prior days. Advancing issues led declining issues by a 11-5 margin at the New York Stock Exchange and nearly a 2-1 margin at the NASDAQ. That means there was more buying than selling. Now, on the economic front, SPX, going back to the S&P 500, let's talk about some of the economic data that came out today. Now, our investors on Patreon got a heads up on this after the data came out, so you guys are full with the information. So we had the April trade deficit narrow nicely to $87.1 billion. However, it wasn't for the best reasons. Imports dropped by $12.1 billion from March, largely on account of supply chain bottlenecks driven by COVID lockdowns in China, and presumably by less ordering from retailers facing an oversupply of inventory. Yes, Walmart is one of those. They have an oversupply of inventory, and they have to get rid of it. They're marking it down. They're trying to move it. But with the consumer either already completed their savings or nearly completed their savings, they're not the ones who's going to jump in and buy these goods. And remember, for companies, inventory sitting on shelves costs money. It burns through money that you don't have to, because inventory can get damaged, it can get stolen, it can get lost in the shuffle. So holding on to extra inventory is an automatic red flag that margin compression is going to occur. Margins will be squeezed because of those negatives of holding on to an oversupply of inventory. Then the consumer credit. This was no surprise to me. It increased by $38 billion in April. Consumer credit, people using credit, increased by $38 billion in April. April marked another month of robust credit expansion, driven by hefty increases in both revolving credit, like a credit card, and non-revolving credit, like a loan for your car. Now, looking ahead, market participants, you and I, will receive the MBA's weekly mortgage application index that comes in at 7 a.m. Eastern. We get the April wholesale inventories that comes at 10 a.m. Eastern tomorrow. And we get the EIA's weekly crude oil inventory report. That drops at 10:30 a.m. Eastern. All three of those tomorrow. Those will be interesting. Mortgage, I can see that dropping. It's fallen for several weeks now. People have lost the appetite for buying homes. Many have been priced out of the market, just like my family and I. We have been priced out of the market. We've got to wait until the market settles back down. Big disappointment, but you live, you learn, you move on. April wholesale inventories. This could be elevated. Remember, there are right now companies, because of the supply chain bottlenecks, they have too much inventory. So this one could come in high. And then the weekly crude oil inventory, I'm on the fence about this one. There has been a small uptick in the amount of barrels produced, but supplies have been depleted as well. Now, there is talk of gas shortages in the US, but I haven't seen any actually take place just yet. It could just be FUD, fear, uncertainty, and doubt. This report should help to clarify that just a little bit. So they all come out tomorrow in the AM, tomorrow morning. For West Coasters, that's some of those are early in the morning. Okay, here's another topic I want to touch on today, and this was Docusign. This is a company that we were thought to be like Netflix, like Zoom video, done and over with. A pandemic boom, then bust. However, there has been a shift in the way people work. There has been a shift to businesses digitalizing at a much quicker pace, forced by the pandemic. Do you consider backlog orders another red flag? Thor Industries and Winnebago has increased numbers. Thor Industries and Winnebago, both RV manufacturers. And let me just, I left that up there. Yeah, 6:30 a.m. Absolutely, on the West Coast. Yeah, that's much earlier than us on the East Coast, for sure. Just real quick, let me touch on the East Coast, West Coast thing for a moment. There was a report that I was reading talking about the SEC wants to improve efficiencies in the stock market. I wonder, I didn't see it anywhere in the report, but I wonder if it's going through anyone's mind. How can you make efficiencies through the West Coast and East Coast work better in the financial market when you have a 3-hour difference? Oh, well, just a thought I had there for just a moment. Okay, Thor Industries and Winnebago, both RV manufacturers. They have been booming. Business has been really good. They've had trouble finding supplies and parts here and there, but people have been buying RVs and boats for the past 2 years at a very high pace. I am very familiar with the boating industry, very familiar with the RV industry. Since they've been hot for 2 years straight nonstop, they are about to experience a slowdown. It's already starting a little bit. As we get into this fall, that will accelerate. So even today, dealerships are finding it difficult to keep inventory on the lot because they are selling it so quickly. but it is slowing down a little bit compared to last year. Just a little bit on the dealership side, not the manufacturer side, the dealership. And the dealership is like the crystal ball for what the manufacturer might have to go to or go through. There's another huge red flag that's way bigger than inventories right now for RV and boating, and that is the price of gas. That is going to stop a lot of people from buying RVs and buying boats because they're going to spend the money on them, they're going to buy them, and then they're not going to be able to use them or go any place in them because they're not going to have enough money for the fuel. That's one of the big red flags with those two industries, the boating and the RV industry right now. And the RV industry leads the boating industry by not quite a year, but several months in front of it. So whatever happens to the RV industry, several months later, that's what will happen to the boating industry. Keep that in mind. I agree with you about the slowdown. Yes. And I mean, it has been hot for the past 2 years. Recessions are also bad for RV and boating industries. However, if you're in a recession and you can find a support area for Thor Industries, for Brunswick is a boat manufacturer. They build Sea Ray. If you can find a base, an area of support, and start with a small position as we come out of the recession and back into, quote, good times, that can be a nice ride and a nice gain. And then getting out once we hit the top of whatever that may be. If we look at right quick, and then I'll get back. I want to talk about Docusign and Microsoft. BC is Brunswick ticker symbol. And you can see they have been falling here recently. They had a nice run from the pandemic low in March. What were they? They were in the 20-some dollars. And then when they peaked at about $115, $120, somewhere in there. So that was a really nice ride. But you can see we're starting this slope right here. And it starts off small. Oh, I clicked on the wrong button. That's not what I want. But you can see this slope. It starts off small and then gets bigger, and then it'll eventually get bigger and kind of drop straight off. That's when you want to start looking for a base somewhere to buy. If we go back here, this is the beginning of 2019 or December of 2018. There was a really hard fall in low. That's a good time to buy for boating industry. Good time to buy for boating industry when you get these capitulation moves like that. Because that's when people are leaving the market because they think that, you know, it's over. There's nothing else going on. Okay, if we look at Thor, which is THO for the ticker symbol. Now, Thor is the RV manufacturer. It doesn't really have that slope like the boating industry. It's more of a straight line coming off this high down to this one. So you can see resistance right there for Thor. Unfortunately, I think Thor is just going to continue its slide down, and it's going to continue this move. I don't think now is a good time to get into the RV industry but watch for capitulation, watch for a base to start forming. And if we look at Thor over time, this is still the daily view. Let me switch to the weekly view to get a bigger view. You can see these little cycles. The past two have been humongous rise and falls for cycles here. But we're on the backside. We're going down in this cycle for the RV industry. Maybe we might get down to somewhere around $50 a share. We're at 76 right now. $50 a share could be an interesting place to build a base for its next run up. Kind of like Bitcoin. Bitcoin is looking for a base right now that it can launch off of for its run. And then Winnebago is that W. No. I forgot the ticker symbol for Winnebago. I can't believe that. I can't believe I forgot their ticker symbol. How could I forget that? WGO, WGO. Okay. Here we go with Winnebago. You can see that same fall off is occurring here that Thor has, and we're just on the back half of the end of a cycle here for RVs, and it's just going to continue to fall. As far as a base for Winnebago, maybe somewhere $20, $15 a share. Maybe that low. It's still at $50 a share. So I'm thinking $20 a share. Maybe a base could be built there. So there's Brunswick for the boating industry, Thor, and Winnebago for the RV industry. If you're looking for a dealership on the boating industry, HZO, that's MarineMax. They are the largest boat dealership in the world. They work with Brunswick. Those would be the two in the boating industry that I would go after. MarineMax. And MarineMax has been a hidden gem in the market for a while. And then Brunswick. I mean, you can see that for years here. MarineMax barely moved. It was range bound for years. And the pandemic, finally, people started taking notice. So this was totally a hidden gem for a while. So yeah, there's Brunswick and MarineMax in the boating industry, and then Thor and Winnebago in Camping World. Even though Camping World does other things, they do sell RVs for like a RV dealership. So there's a few ideas there for both of those. But then again, we're on the slowing side of the cycle for boating and RVing. But it's a good place to look for bases, bottoms to form, and to add shares for the next kickoff. All right, let's talk about Winnebago here. I'm sorry. My goodness. I still have them on my mind. Docusign. DOCU, Docusign. That's who I want to talk about. I'll talk about Docusign. Now, they had an agreement with Microsoft, okay? That agreement with Microsoft has gotten tighter and linked together. I think one day Microsoft may buy Docusign. I think Docusign, because of this, now I'm hitting buttons affecting my live stream. I hope I don't cut my live stream off. Docusign would be a very interesting acquisition from Microsoft. And this deeper integration between the two companies, it to me looks like a green flag, that Microsoft one day might just buy Docusign. Now, it does depend on what Docusign can bring to the table and what Docusign offers. I don't know why it's not showing up here, but I think Docusign's got earnings in a couple of days. One day this week. Okay, but let's talk about this. So Docusign was up 4.1%, up another 4.6% in the after hours. And then Microsoft, MSFT, it finished the day, drum roll, up 1.4% and then down 0.2% in the after hours. So hardly anything. Microsoft has been in the technology sector such a safe bet, with all these ups and downs the market's been making. I mean, it is down 18.9% from its the beginning of this year, and it's off quite a bit from its high, but the volatility to me in Microsoft seems to be a little less motionless, right? It doesn't have the big swings like other technology companies have. But that out of the way, let's talk about Docusign and Microsoft. So Docusign is expanding its strategic partnership with Microsoft. They're looking to accelerate the work from anywhere kind of tagline, right? Docusign and Microsoft are providing new integrations and capacities that enhance their joint customers' ability to prepare, sign, manage agreements, all in the cloud and practically from anywhere. Again, that seems to be like the main theme between Docusign and Microsoft's tighter integration is the work from anywhere aspect that the two can bring, right? Working in the cloud. So some of the innovations, Docusign e-signature for Microsoft Teams. This will allow employees to get real-time notifications on agreements out for signature directly within Teams, so you don't have to go out and open up other apps and so forth on the computer. Microsoft and Docusign will work to deepen this integration and to deliver additional in-use scenarios, including live signing in team meetings. Last year, or later this year, my apologies, later this year, not last year, Docusign plans to release an improved user interface with a built-in dashboard, automatic synchronization. That's a word. That's a tough word for me. Of data between Microsoft products and Docusign. So their e-signature envelopes, as they call them. These are just a couple of the integrations coming from Docusign and Microsoft. So again, watch for this integration to tighten and maybe Microsoft purchase Docusign. If there's enough synergies between them to work together like this, that would make it an even sweeter buy for Microsoft. So something to think about. This is a boost to Docusign. Obviously, they've been hurting. They were a pandemic boom and bust. Again, I'm loading up Docusign's chart here. You can see it. They ran up hard during the pandemic and then fell afterwards. But this is a nice little pick-me-up agreement with Microsoft that I think can help out Docusign a little bit. Okay, well, that's everything that I wanted to cover today. Any questions? Now would be a great time to plug them in to the keyboard and ask away. And again, I'll look into that Twitch integration and see if I can do it or not, and what it takes to sign up over there and so forth. I started this week. Remember, we were having that little freeze up happening. I worked that out by expanding the bandwidth. So little extra on the expense side, but you got to have the video working when you're doing videos and live streaming. So we did that, and I'm wondering if Twitch is an integration into that or something that I can look at. All right. No questions? Well, thank you. You are welcome. I greatly appreciate it. Tomorrow, again, it's looking at choppiness, right? The S&P 500, let me take volume away. Again, we are inside this circle right here where nothing's really happening. It's like the market is just like waiting for some sort of sign or data release to take this market, I think, back down again. CPI data, oh, doesn't that come out on Friday? Let me double check. I think it does. June 10th. Yeah, so Friday. Ooh, that's that. Yep. All right, so we've got CPI data on Friday, June 10th, and then we get our FOMC meeting next Tuesday and Wednesday. That is going to be a two powerful movers of the market. So CPI, which is inflation data, that comes out on Friday, June the 10th, and then Tuesday and Wednesday we have the next FOMC meeting. We're expecting a 50 basis point rate hike this month, a 50 basis point rate hike in July. There's no FOMC meeting in August. They get a vacation break. And then what is going to happen in September? Right now, a 25 basis point rate hike is what's kind of penciled in and what investors are kind of betting on. Can we see that stay, or is it going to go up to a 50? And the 50 that we're getting this month and next month, are they staying at 50? Are one of those going to 75? These numbers, if they go higher, the market goes lower. If these numbers stay the same, the market might just go lower. Then again, the market has a mind of its own. If, and I don't even see this probability, but if for some reason the numbers get lowered, the market's going higher. But I don't see them getting lowered, not yet. And remember what happened today in Australia. They came out, they said they were doing a 25 basis point rate hike, and they came out and did a 50 basis point rate hike. They doubled what they said they were going to do. That sent the market down. Anything higher than these numbers that I just went over, and the market's going down. Do we gap up tomorrow and test 416? All right, let's look at the SPY. Let's look at the SPY. I said it was, and it just slipped my mind there. Okay. Okay. So the box we drew yesterday about its risk reward, man, today, look at how it just came right back up and just tagged this line right here, just barely creeping into the green side of our box right there. That is interesting. As far as gapping, well, right now we are at resistance, and let me go into a little closer. I'm going to start with 1 hour. When we go into 1 hour, I want to point out a couple of things here. Can I get them on the chart? There we go. All right, the area that we are at, 415, that is resistance. Now 415 right here, right over my head, support. That was support. 415 right through here, support. Again, 415, support at first, then it got choppy, broke through, came back, it got choppy around there, had a little breakout, pullback, choppiness, and then it went down. So this area has got a ton of reactions around 415, right where it is right now. I would think, and remember that pointing out these areas on the 415 line that are support, remember that old support can become new resistance. All right? Old resistance can become new support. So as we drill in here, again, this is the hourly chart. Since sinking underneath it May 5th, okay, we tried to break through on May the 27th. May the 27th all the way until June the 1st. We tried breaking through this 415 and give it a little breathing room. It's not going to be exactly at 415. One of these days actually made it to 416.45. So a little breathing room, but 415 is like a magnet. And right now it's a resistance magnet. And then we have June the 2nd, where it was up above it, but again, like a magnet, pulled it right back down, and we gapped down, okay? And then again, right here, we've got June the 6th, resistance. So we are sitting right now on that resistance area. The last time we were sitting in this kind of position, just barely above it, we would need to go back to May the 31st. That's the last time we had a green candle just slightly above it, and that's where we got a series of red days right here in a row. May 31st and June 1st. So if I was playing this, the risk reward is to the downside. there's not a lot of reward to the upside in this particular setup right here. So I'd be curious to see. I'm going to put a circle like this. And then tomorrow, let's see if this circle gets filled. As in, it comes down. Oh, come on. I'm just trying to make an arrow. It's like my pen ran out of ink. All right, there we go. That's close enough to an arrow. All right, so now if we look at this here, there we go. Now, if we look at this as, well, could there be momentum to break to the upside? Maybe there could. I'm going to put volume back on, and I'm going to put my Bollinger Bands back on. Remember, with the Bollinger Bands, that's the top and blue lines that are above and below that candles that follow them around. The further they're apart, the higher volatility is. The closer they are together, the lower the volatility is. And right now, we've got contracting price action, and those Bollinger Bands are really coming together. And typically, when a stock is going up or down, it doesn't really break those Bollinger Bands. They happen so close together anyways, it's tough for that to happen. But it can happen. Just back here on May the 4th, it broke above it before the big pull down thereafter. So if I'm looking at this, what I'd want to see for a move to the upside is I want to see volume come in really strong. I think that's the only way we get a move to the upside to break above this 415 on the SPY. And it's going to take volume. And right now, volume is, if we just go back here to the 1st of June, volume is declining. That line is getting lower. However, and again, this is an hourly chart. This afternoon, as we were rising, I think investors noticed that, hey, maybe we can get a few bucks here because we've got money flow and RSI both trading up, which are those two lines here at the very bottom. They were trading up during the last couple hours of the day, but I don't know. I feel like this is going to head south tomorrow or just move sideways. Because it's another point here. It's sitting right here at the very top of the Bollinger Band. Now, Bollinger Band doesn't mean it's sinking down to the bottom because it's hitting resistance, but that's two flags here saying resistance for the SPY. All right, if we go to the Qs, we're looking at the same thing here. So we put our boxes on yesterday. We were thinking maybe it could go up a little bit because it's not quite at the top of some kind of resistance. Let me go back here to a daily and feel out the resistance area here. It looks like 312 is an area of oh, come on, why aren't you working? There we go. 312 looks like an area of resistance. Now let's go in here a little tighter. Going to the 1 hour. All right, that blue line coming in, we can see it here on the right side of our green box. We're not quite to it, so we could move a little bit higher on the Qs before hitting that resistance. The last time we hit that resistance would be on June the 6th right here, and we were rejected right at that line. The last time we broke above this line, we'd have to go back to June 2nd, and we had a nice breakout, back test, and then move higher. But then we got to the end of the day and market closed. The very next day, we come into a gap down. So I think we could float a little bit higher to tap this resistance and then sink from there. But I don't think we've got anything that could lead us to believe that there's enough momentum out there to break these resistance on the SPY or the Qs right now. All right. What else? Anything else you want to look at? And as far as the 116, yeah, it could get up to 116. Again, these numbers are never precise. 115 is just where I have it marked at, but you give it a little breathing room for it to move. And that you can see that a little breathing room here on May the 31st, June the 2nd, June the 6th. It got up to 416.60, 416.50, 417.44, 415, 416.45. So a little breathing room there around 115, but I think we're coming back down. That would be my probability. I think we have a greater probability of downside than upside for tomorrow. On the SPY, on the QQQ, there's a little room to kind of slowly float up, but then we hit resistance and then we'll come back down. And with CPI on Friday and the Fed next week, boy, those are two tough cards to have. All right. Well, if there's anything else you'd like to talk about, let me know. I'll give you a few moments to ask away. And remember, if you have not joined Webull yet, do so now during their 4th birthday party celebration. You can get 6 free stocks. Open the account, deposit any amount, and you get your 6 free stocks valued at up to $12,600. Now, realistic here, I don't know how many people are going to get that much, but you're going to get something, and that's a pretty good return on your investment. It doesn't take long to sign up. And yeah, just want to plug that real quick. And then also, if you do like the content we have on this channel, then consider joining investors just like you and me. Clicking the first link in the description will get you there. become a member. Ton of benefits, lots of information, valuable information to help you along your investor journey. Oh, and one more thing about the 6 free stocks on Webull. That's the second link in the video description, and that'll take you right there to sign up. So there, you got it. And as a free thing that you could do for me is to click that like button, share this video, and make sure you're subscribed. 3 real quick taps of the button there on the screen, and it does this small channel really big thing. So I greatly appreciate it. I appreciate your time. I appreciate you being here. And let's see. Is it true that trading the SPX help with taxes, or is better? Huh. That's an interesting question. Let me just... Honestly, I do not know the answer to that. Let's see. It looks like maybe with options. So I typed in, is there a tax benefit to trading SPX versus SPY? And I get the first line, investors are given tax relief for the gain made on SPX options. On the contrary, the SPY option is highly liquid, less expensive, and frequently traded. So it's treated as a short-term gain. Therefore, it's taxed as ordinary income, higher than the capital gains tax rate. That is interesting. That is interesting. Let's see. SPY options are cheaper, more liquid, smaller spreads, and get taxed at short-term interest rate. It seems like it all boils down to options. Obviously, please consult a tax professional for specific tax advice. But currently, the IRS treats SPX index options differently than SPY options. SPX options get special Section 1256 treatment, which allows investors to have 60% of the profits made in trading treated as a long-term tax rate. That's interesting. So for many, the SPX options can offer a tax advantage. Okay. That's a good one. Great one. Great one. Let's see. So SPY options are cheaper, more liquid, smaller spreads, and get taxed at short-term tax rate. SPX options are more expensive, still liquid, larger spreads, often lower commissions, and better tax consequences for most. Okay. So that's interesting. Let's just let's pop this one up. I'll bring it over. All right, so SPY versus SPX options, and a lot of it has to do with options. This is going pretty detailed. Same with RUT versus IWM, NDX versus QQQ. So SPX is more of a European style option, which means, among other things, that their monthly last trading day is different than those of ETFs, indexes, options expire on the third Friday of the month. So their last trading day is the Thursday before the third Friday of the month. The SPY are an American style option, and both our last trading day and the investor's expiration day for these options are the same, the third Friday of the month, just like options on individual stocks. This is a critical difference, and not understanding it can cost an investor dearly. With the SPX option and other index options, there could be a major development after the option market closes on the Thursday preceding the third Friday of the month. Thursday is the last trading day, for the SPX, not the SPY. Interesting. Another difference between the index options and the ETF options is that the index options are cash settled, and the settlement takes place only on expiration date. ETF options, on the other hand, can be assigned at any time, but rarely would be unless they were in the money. All right, here's tax treatment difference. The IRS treats these indexes differently from stocks or ETFs. The index options get special Section 1256 treatment, which is the SPX, which enables the investor to have 60% of a gain as long-term at a 15% tax rate, and the other 40% treated as short-term at the regular 35% short-term capital gains rate, even if the position is held for less than a year. By contrast, the ETFs, which is the SPY, the QQQ, are treated as ordinary stocks, and thus, if held less than a year, all gains are taxed at the less favorable 35% short-term capital gains rate. Thus, the index option can be better from a tax standpoint. You should consult with your tax advisor to see how these tax implications may or may not be significant in your situation. Okay. Hopefully that helps answer that question, but definitely talk to your accountant, talk to someone that you trust in that department for handling your taxes to get a better answer on that. But we just learned together on the options difference between the indexes versus the ETFs. All right, cool. Well, I guess we'll, well, I haven't done this and I've been meaning to. I want to. Let's check in on Bitcoin. Ticker symbol BTC USD, and I use Coinbase for the data, which is typically the second option. And it's where I've got all my charting. Let me go to the daily view. And it's still trading sideways. Going back to May the 8th when it had its big drop, it's consolidating right now. And that the Bollinger Bands, which were extremely far apart, are now relatively close together and nearly right on this red box. Now, the question I had is, I think Bitcoin is going to continue to fall. I think Bitcoin has got another leg down, and the other leg down does not look pretty. So right there, there's that next leg down that I think Bitcoin is going to have. My question is it going to happen sooner or is it going to happen later? So sooner would be about July, the end of July, hitting this target. Later would be the middle of October, both this year, hitting that target. And right now, price action is right up against the shorter term trend. As I scroll in here, the candle, yesterday's candle, it stayed right on it. Today's candle is actually above it. It is above that short-term one, but it's staying trapped in this box and in this trend line. So, interesting. It could be that it's going to hug the shorter-term trend line, or maybe it is going to break out and up. You know, maybe it comes, it back tests on this, and then it bounces off that, and then, you know, starts moving up towards that trend line in some fashion. That's a possibility. Or it just kind of gets squeezed in here, it falls underneath it, it comes back up, and then it falls back down, gets rejected. So two probabilities there. And my final target is right around 20,000. I think that would be a real good base for Bitcoin to build from. If we were to go back and look, November of 2020, it was building a base in that area before it launched and went on its big run. So, yeah, that's Bitcoin. Oh, you are very welcome. Absolutely. All right, so we'll wrap this up for tonight, and we'll get back at it tomorrow. So make sure you do hit that like button. That helps out a little channel like this. Sharing this video helps out a little channel like this. And also joining us on Patreon, that really helps out a small channel like this. It helps to get the content out, quicker, and really have that content reviewed and being thoughtful with it, making it actionable. That's the key thing. Anything that I provide, I want it to be actionable. I want you to be able to use it within your own investment thesis along your investor journey. So thank you so much for your time, for your patience and your watching and being here with me. I greatly appreciate that, and I greatly appreciate you. So good luck tomorrow. Things look like we're, again, right up there against that resistance line like we were a couple sessions ago. So we'll see how it goes tomorrow, but we could have a pullback or continued choppiness, just moving sideways. All right, ladies and gentlemen, thank you so very much for joining me. I greatly appreciate it. Again, I know I keep saying that, but it is, I truly do. Okay, have a good night, and I will see you in the next video.